Well, one of the mortgage options that has been in the news a little bit recently is a zero down mortgage option. Yes, that's right. Putting nothing down. Is this a good idea? Is this product available? What does it actually entail? We'll try to break it all down next with Bill Litton. Well, hello and welcome into the Smart Mortgage Show. I'm Ben George with Bill Litton, Regional President at Cross Country Mortgage. You can find us online, smartmortgageshow.com. We cover all kinds of mortgage lending topics. And today, Bill, we're talking about specifically the zero down mortgage option. I just saw this in the news, and I know we've always thought 20% down, right? 20% down, 20% down. We've talked about on the show, there's obviously a lot of flexibility, but I don't know that I've ever really seen the zero down.
Yeah, so it has made a comeback in certain ways because of where our market is right now. But, they're advertising it more. There have been iterations of this product out there for a long time. So for one thing, if you're a veteran, you can do zero down. You always have been able to. Or if you use a USDA loan, you can do zero down, and those have always been available. Now, those are two more specific products. When we look at a more widespread product than a VA loan or a USDA, there are these more advertised these days zero down products for first-time home buyers. And we think that they are a really great way for somebody to get in who doesn't have enough money to put the 3, 5, 10, 15, 20% down. It's a way to get in with very little. There are some drawbacks that we should discuss, but overall, it's a great option, and we're always happy that people have options to consider.
So it's not a brand new thing. It's just more with the time and the environment that we're in that maybe this is an option that's being considered more often than it has in the past, I guess, per se. So let's hit on these drawbacks then, Bill, because I listen to it and I say, okay, like everything in life, it sounds too good to be true. It often is. So if a zero down mortgage, if this is an option that I'm considering and I qualify for, what are the downsides?
So I think it's important to point out the downsides because here's the thing. If you have no other choice and you have very little money to put into buying a house, but you have the credit and you have the income and you have an opportunity to buy a house that's going to allow you to do that. Okay, we'll talk a little bit about that more in a second. Then it's a good option, right? It's definitely better than renting. But one thing to consider is when you do zero down, the drawback is you're usually paying more in PMI, or you're paying a higher interest rate, or you've borrowed, instead of having to put 3% down, that 3% piece is borrowed as a second mortgage, and those usually have higher rates on them. So sometimes we run into people who say, hey, I want to do a zero down mortgage. And I say, well, how much cash do you have available? And they say $25,000. And in those cases, we actually work up the zero down and then work up the option where they're putting, let's just say $25,000 into the purchase, and the payments are so much lower and the fees are lower, so that over time you're saving a lot more money, that they might gravitate towards that option that had out of pocket, right? Hey, if you've got 25 grand and you're saying, I want to hold on to my cash, there's nothing wrong with that, because we believe holding on to cash is a good thing. But we're always looking for points of leverage. And sometimes going from zero down to putting that 3 or 5% down gives you a whole lot of benefit in interest rate, lower PMI, and lower fees.
Yeah, that's pretty interesting. Does it impact the home buying process at all? I mean, we've talked about being competitive with your offers, and we're in a competitive environment still with real estate, especially around PA and the areas around you, Bill. Does it matter at all? Is that something a seller would look at?
Ben, we've been hanging around each other too often here because you're taking the words out of my mouth. But that's exactly the other big issue is when you put zero down, the seller is usually a little bit concerned, because if the house doesn't appraised, there's nowhere for you to go if you don't have any money to put down to cover an appraisal gap. It's really not a competitive offer when you put zero down. So in this market, when there aren't a lot of listings available, there's not a lot of inventory, the zero down, you're more limited to, buying from a family member, buying from a friend, buying a distressed property that's been on the market for a while. And they say, hey, we've had it on the market for 6 months. Why not take a shot with the zero down person? You're just your options of houses available to you to have your offer accepted on are very limited.
All right, very good. Anything else, Bill, you want to add on the zero down? I want to get into your products a little bit, but anything else zero down that people just need to be aware of if they're seeing this in the news or kind of searching for this online and trying to determine if it's a good thing or not?
Yeah, the big thing to look out for is if it's zero down, but there's some sort of a second mortgage or there's some kind of a grant that requires you to pay it back, just know what you're getting into. Know that it's not free money that got you there. And it might be okay that you have to pay it back, but just make sure you're fully aware of what you're getting into so that in 5 years, when you try and sell the home, you're not surprised by the fact that you have to pay this grant back or this extra money that helped you to get to zero down.
All right. Well, again, if you want to go sit down with Bill and the team at Cross Country and get your free mortgage consultation, beginning the process to talk about your different options, exploring some of the numbers and what it might look like for zero down versus 3, 5, 20%, whatever that might be. What's most common for you, Bill, with the people you work with in terms of down payment right now? Are you seeing more people still going the traditional 20% route, or do you see these lower or down payments up front?
Well, we definitely see a mix, and it depends on, if you're a first-time home buyer, you have less money to bring to the transaction. If you're a second or third-time buyer, you have more money to bring. I think the key to the most important thing to understand is you have options, okay? It's the minimum amount down options that are hard to get accepted right now, but I just had a customer where we were putting down 20%, and we have a product where you can put down 15% and not pay any PMI, right? Which is really a powerful product. And we had a conversation, and for them, it was a pretty sizable purchase, and it was going to allow them to hold on to $40,000, $40,000 in the market, or $40,000 in renovations to the home, so there was no penalty to put less money down. So again, I think there was this stigma back in the day that it said, like, work as hard as you can to pay off your home. And that's not really, I think there's a higher sensibility in finance right now that says, well, putting 20% down is great. If you can do it and you have plenty of funds and you're not exhausting all your bank accounts, awesome, go right ahead. But if you can't, it's not the worst thing in the world, and you have options.
All right. Well, again, if you want to take advantage of that free mortgage and loan consultation, you can do so by calling 484-352-4151 or log on smartmortgageshow.com. And just quickly, Bill, for anybody that's you wanted to come in and discuss these options, what are some of the things you'll discuss up front in that first meeting?
Yeah, so in the first meeting, we want to learn, A, where are you today? B, what is your goal? Where are we going to? And then we want to learn details about, how much money do you have to put into the purchase? And does that money eat into investment accounts? Are there any options to not invade those investment accounts? Is it the best option to take from the investment account? So we're going to look at all of your particular set of circumstances, your income, your credit, all of the particular details to figure out the very best financing options. And that first phone call is really a process of discovery where we're just learning about you so that we can help to put together the best options.
Awesome. Very good. Go to smartmortgageshow.com. Check out all of our videos, all of our content. They may be able to answer some of the questions you have right now, but if you want to get into more detail, your specific situation, always best to get in touch with Cross Country. You can do so right there through the website. If you watched the video this far, please hit subscribe. We'd appreciate that. And if you're listening on podcasts, come on over to YouTube as well. Check us out on the Smart Mortgage Show YouTube channel. All right, Bill, as always, thanks for your time. We appreciate it. We'll do it again soon.
Thanks so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.